What's going on, everybody? Welcome back to another portfolio update video. In this one, the account has continued to hit new all-time highs as we move towards the end of the year. I have made a few small moves in the account that I want to go over and a couple of bigger moves that I'm planning, so we'll discuss all of that. I want to talk about Palantir's valuation because that is starting to get a little crazy. There's been some news regarding Meta stock and Google stock that I want to go over. And I want to go over some historical December trends so we can start to try and get an idea of what might happen in December this year. If you're new here, my name is Sheldon, and I like to make completely transparent videos talking about how I invest in the stock market. So if you're somebody that wants to learn how to invest in the market and build your own portfolio and analyze stocks, then subscribe to the channel and let's all learn about the market and grow our portfolios together. With all that being said, let's dive into the accounts. And I believe around our last update video, we had around $74,000 in the account. I could be off by a little bit there. But currently we are now sitting at $78,805, so almost $79,000. You know, it's continued to go up. It's continued to be a crazy year in the stock markets. And even just on a 1 month basis, it's up a little over 10 grand in just a month. So that's a really good month. We are now up over 50%, 59% in the account in total, almost $30,000 on my principal investment here. And the first thing I want to talk about here is the few moves that I made. So if you've watched a couple of my last portfolio update videos, you might have remembered I said I'm looking at selling Lemonade. Lemonade is a digital insurance company that it was a really small position for me, and one that honestly, it just kind of ended up at the bottom of my portfolio, and I never really ended up paying that much attention to it. It was a really small position. Like it was around 1% or 1 or 2% of my total portfolio. And I held it for a really long time. Like, give me 1 sec. Let me pull up their stock chart. So this is a 5-year chart of Lemonade. And I believe I started buying Lemonade in the back half of 2021, maybe early 2022 here. And I think I had a cost basis of roughly around where the stock is trading now. So I was down on the stock for a long time. I think I was down over 50% for like years. I think I held it for like over 2 years. So it eventually, recently, if we just look at like, let's say year to date of like, this is pretty crazy actually. It just, in the last 3 months, like since the beginning, kind of roughly the end of October, it just shot up. Like I said, it was a small position for me, and I never really paid that much attention to it. So I did go ahead and sell the stock, not because I think it's a bad investment, and I want to make that clear. But mainly I sold it because I just want to trim down the amount of positions that I have in my portfolio here and just rebalance it a little bit. You know, I sold it and I put the money into VOO because the stocks in the account are starting to get a little bit out of my target weighting. So, and I just wanted to be able to allocate my focus to my bigger positions and the ones that, you know, have a lot more money in them, basically. It was just kind of a position that I had from a long time ago. I don't think it's a bad investment. You know, I don't really even know that much about it. I just held it in my accounts, never really paid attention to the news. So I thought, since I was break even on it, you know, I go ahead and sell it and then cycle that money back into something that I do pay a lot of attention to, which is something like, you know, for example, Palantir. I bought 1 share of VOO with what I sold from Lemonade, just to kind of try to reweight my portfolio a little bit with ETFs and stocks, because the amount of allocation towards just stocks in the account has grown a lot in the back half of this year. So selling Lemonade and putting it into VOO, which is just an S&P 500 tracking ETF, was it was a move that I was comfortable with, and you know, yeah, that's pretty much all there is to say about that. The next thing I want to talk about is Palantir's valuation. So Palantir has continued to go crazy. You know, I'm actually down. What was it? It was down 1.5% today. They did break the 70 mark, and I am thinking about shaving my position in Palantir a little bit, and let me tell you why. So they are now worth around $159 billion. They have an EPS of only 20 cents. And if we look at their PE ratio, guys, this is just insane, right? So the valuation of it, let's just pull up the 1-year chart because it's crazy. From like $17 to $17 to $70. But their PE ratio is just insane. If I grab this calculator here, we can see that so if you don't know what EPS is, earnings per share is the amount of earnings that a company has divided by total outstanding shares. From your EPS, the multiplier that you get your stock price from is your PE ratio. So if we take, oops, there goes my calculator. Where'd my calculator go? If we take the stock price of $69.85 and we divide that by our PE ratio, which is $349.53, we're going to roughly get our earnings per share. So 0.2. So when you ever hear someone saying they're trading at an X multiple of earnings, they're referring to the PE ratio of the company. So right now, for $70 of Palantir, you have to pay $70 and you are now, quote, entitled to 20 cents of their net income, which is very expensive if you don't know. That is starting to get ridiculously priced. Like, if we just look at Meta, for example, they're trading at a 28 PE ratio and they have $20 earnings per share. So if we take their stock price, or I guess like you can see the math here, but if we multiply their earnings per share by like around $30, you get their stock price. You're paying a 30 times multiple of Meta and you're getting $21 earnings per share. And Palantir, you're paying a 350 times multiple and you're only getting 20 cents per share. So, that just, and it's good for good reason. Palantir has come in and they've had some insane growth in their revenue numbers. And they've been the new hot hype stock of the market, and a lot of FOMO is starting to pile into the stock. So, it is companies like these that command a valuation that high, but I struggle to put a case together where you make good money in this stock in the next 5 years. You kind of missed the boat already is basically what I'm getting at. If you're looking for those outsized returns, like this thing is not going to double again. If it does, I'll be extremely surprised, but I can pretty much guarantee that the valuation, you're not going to hit a 600 PE ratio on Palantir unless they start to hit 50, 60% revenue growth numbers. But even for them to maintain the growth numbers that they have now, they're only at 25%. And so if they get back up to 45, something in what they had in 2021, 40% revenue growth, then you could maybe put a case together where this thing hits over $100 a share. And maybe they start to become more efficient too, more money starts to make it to their bottom lines, their EPS increases, which could, bring the PE ratio down and bring the valuation of it down. But my plan with Palantir, anyway, what I'm getting at is, first of all, I think it is overvalued. Second of all, my principal investment that I made into the stock was 160 times $8.31. So, sorry, I'm bringing up this calculator again here, but 160 shares times 8.31. So I roughly invested around $1,330 into the stock, and that's divided by what it's trading at now, so $69, around 19, call it 20 shares, just because round up there. But I think if I do sell anything for Palantir, I'm probably going to sell at least my initial principal investment. And the reason being that it almost eliminates the risk going forward, because whatever I put into the stock initially is now out of the stock, and anything left in it is just gains. To let the stock ride out, at least by taking out that principal investment, that makes me feel better about it, because at least I'll have that first initial investment back, and maybe I'll cycle that into either VOO or maybe Google, because I think Google is looking like a lot better of a deal than, or one of the better deals in the stock market right now, because honestly, there's not much that is looking like crazy deal right now. Everything is really inflated in pricing, and now is not when you buy stocks and get crazy returns. Now is a good time to continue to average into stocks. Uh, but you're not going to start a position right now in a lot of these big tech companies and see, 200, 300, 700% returns in the long run. So if I make any moves coming up, I'm taking the principal investment out of Palantir and I'm going to cycle that into either VOO or, Google. So that's the main move that I'm going to make in the account pretty soon, probably, especially if this thing continues to stay over $70. And let me know if you guys have any suggestions or advice for what you guys do when you hold a stock and it runs up so much that you don't really know what to do with it because you're holding an overvalued stock. And it's a large percentage of my portfolio now. Like it's almost 25% of my entire portfolio, or getting close to that, maybe a little bit under that. But what do you guys do? I think a smart thing to do is take out your principal investment, let it ride. Unless it continues to just get crazier and crazier of a valuation, then maybe you start to shave the position even more and continue to cycle money back into something that you think is undervalued. So let me know if you guys have any advice for that, because this is pretty much a new situation for me. I've never had a stock that's run up this much, and I just don't really know what to do. And I think that's probably my best course of action. So yeah. That being said, let's move on to Meta stock. Okay, so this is a 1-year chart of Meta, and I'm not going to lie, guys, Meta is one of my favorite stocks in the market, period, and it's just got one of the best business models that I think you can literally have. They've had a crazy year. They went from around, just over $300 to now they're over $600. They've had, in, I guess, year to date, they've had a 73% year to date return. $1.5 trillion company, not incredibly overvalued. They're trading at call it a 29 PE ratio, with 21 earnings per share. And they just had some interesting news come out. They came out with an announcement that they're looking into nuclear power for their data centers, which is interesting. I have never heard of this for data centers. I've heard of some companies maybe looking into solar power, but not nuclear. And honestly, that's just kind of interesting. I don't know much about nuclear power, but for one company out there, this is a juicy looking contract for them. Getting a nuclear power plant contract with Meta would be an insane deal. So shout out to whatever company gets that. But, the market definitely reacted well to that news in the last 5 days. It's gone from 568 all the way back to 613. And I believe in my last portfolio update video, I did say that I wouldn't be surprised if Meta was over $600 and before the end of the year, and it is. And I think how many shares do I have? I got 8 Meta shares. I wish I had more, honestly. I would, if Palantir wasn't my biggest position, I would definitely if I didn't have so much tech at the top of my portfolio, I would buy more Meta stock because it's been a pretty good investment for me. I've been holding Meta stock for years now, and they're also headed into their big season. I think the Oculus sales this holiday season are going to be crazy. I've seen a lot of advertisements for them. I've had some friends and people at school talk about, how they want an Oculus. I have a buddy that just bought one, and it's pretty cheap, at least compared to the Apple Vision Pro. So I think they're going to kill it on Oculus sales over Christmas. They're also going into holiday season for Meta. They're an advertising company, right? That's how they make their money. So every business out there is is starting to spend crazy money right now in this month on their digital advertising, and Meta is the company that's capturing all of that. And historically, if we look at their quarters, I do believe Q4 tends to be a bit of an outsized quarter for them just based off revenue. So yeah, in Q4 of 2023, they had 40 billion compared to look at Q1 28, Q2 31, and then 34, and then 40 in Q4. So they're probably going to have a record quarter this year, if I'm being honest. And then if we look back historically, 27, 28, 27, 32 in Q4. And we look back, yeah, it's just Q4 for Meta, always their best quarter. So it's going to be good for the stock price for sure. And then we'll see in their next earnings report how good they actually did this season. But I am expecting them to do really well. This company essentially prints money. Their profit margin is disgusting on this thing. Like it is, what's their profit margin here? They have a 35% profit margin on what's the market cap? A $1.5 trillion company is insane, by the way. Like, let's just, for example, let's look at Palantir's profit margin. It should be decent, but it's about half of Meta's. So Meta is not only less valued, it's got a lower PE ratio than something like Palantir, but it's got way higher earnings per share. It's got way higher profit margin. So that also speaks to, Palantir just being overvalued a little bit. So that is some news for Meta. They're looking into nuclear power. They're going into their crazy quarter. They're over $600 a share. Definitely, I'm not going to sell my Meta shares. Definitely going to hold those for the long term. Maybe even if the market crashes and I can get back into Meta for $500 or something, I would probably buy more Meta stock. So yeah, that's pretty much all I wanted to talk about on that one. Google has also had some really interesting stuff going on with the stock lately. And they've been in some, call it regulatory hot water, I guess. The DOJ thinks, even though they are kind of a monopoly, but they want to step in and force Google to sell Google Chrome, I think is their main stipulation, I guess, call it, that they want to force Google to do. And this has been going on ever since July. Their stock has really crashed, and man, I wish I could have picked up some Google shares at 150 there. But if I do sell shave out my principal from Palantir, I'm probably going to cycle it into Google stock because it's one of the only companies that I do see, a decent opportunity to buy right now. And they are sitting at a 23 PE ratio. So they're even cheaper than Meta. And they don't have quite as crazy earnings per share as Meta because Meta's just a money printer. But they still have a seven earnings per share. So you're spending a 23 multiple on their earnings per share to get their stock price. But with Google, they have YouTube. They own YouTube. They own Fitbit, I believe. They still have one of the biggest softwares in the world. They have all the most talented developers in the world. They even have hardware products. And at the core, they're also an advertising company like Meta. So, and if we look at their historical revenue as well, just quarterly, this is actually kind of insane. But look at this, all green. They haven't missed quarterly growth for revenue since Q2 of 2020, and every company lost money Q2 of 2020. That was right after COVID hit. So they're a beast, man. Google is a beast. This is if you know who Khabib is and the fact that he's never lost a round, I guess controversially never lost a round in the UFC before he retired. That's Google, man. That Google has never lost a round. They've come out and just won knockouts every single quarter. It's kind of crazy, a company like this. And if we look at what their profit margin is, that's got to be, not quite as crazy as Meta, but 27% profit margin. And they are a bigger company, 2.11 trillion. So they got about a $500 billion beat on market cap compared to Meta stock. But like I said, the Department of Justice wants them to sell off Chrome, and I believe they also wanted them to not have Google Chrome installed as a default browser on the Pixel, which, I mean, the Pixel is literally their own product. So why would their own browser not be installed on their own product by default, I don't know. It just kind of doesn't make any sense. And Google agrees that it doesn't make any sense because they're literally firing back. And they called the Department of Justice a radical interventionist. They said they had a radical interventionist agenda when it came to this. And this is coming directly from Google. and they're talking about the government. So that's big. That's why there's been a little bit of rough waters in their stock lately, but I think things like this blow over, and it presents buying opportunities in the short term. So I do really like the prospect of buying Google here, and this is literally coming from like the president of global affairs of Google and Alphabet. He's calling the Department of Justice radical interventionists, which is pretty crazy. You don't typically see that. You typically see regulatory, lawsuits and this and that and all that kind of bullshit, but this is a little bit of a different situation, and it all got reflected in the stock price, right? Like if we look at a month chart, it did peak at around $183, but the multiple that their earnings per share is trading on, it's pretty cheap compared to all of the other Mag 7 companies. Like if you look at Amazon, and just for fun, let's pull up Amazon, because now I'm curious. They're trading at like a 46 multiple, and they also only have like $4.68 earnings per share. So, this is one thing that I think is really core to understand in the stock market is how these numbers work, like how you get earnings per share and how you place a multiple on earnings per share to get that stock price, and how big that multiple is depends on how overvalued or undervalued that stock is in the market, and how much expectation there is for that company to grow. And companies that are expected to grow at higher rates, they're going to have higher PE ratios. And companies that are killing it in the market are going to have higher PE ratios. And some of the bigger, slower growing companies like Apple, like Google, they're going to have smaller PE ratios, but it also means that their valuation isn't as inflated. So, these are just some things to keep in mind when you're analyzing investments, and when you're, looking at what you want to buy, if you're rebalancing in your portfolio, which I'm kind of doing because, Palantir is, like, I think I already said this, but it just grew to like a 25% position out of nowhere. and so I'm thinking about, like, I'm out of weight now. Like typically I want like 50% ETFs, maybe a little bit less than that. I think I could live with like a 40-60 split of 40% ETFs, 60% stocks, maybe even less than that as we head into bull markets. So anyway, in terms of individual positions, that's pretty much what I wanted to go over. But there is one more thing that we can talk about, and that is the Santa Claus rally. If you have never heard of this, it's an actual term, and it's something that gets talked about and thrown around in the stock market. It's kind of based on the premise that, there's a lot of optimism going into the last part of the year. A lot of these bigger funds aren't actually working. A lot of people are on holidays, which leaves the market to retail investors like you and me. And typically retail investors, which is just people that buy stocks on their own, they are optimistic in terms of the market. Typically they're bullish. Typically they're going to be buying stocks, which leads to also a Santa Claus rally. It's typically goes from Christmas Day to January 2nd. So it's just something that leads to more optimism in the market. And historically, December is a pretty good performing month. We also have a Federal Reserve meeting this month from the 17th to 18th. So we'll see a press conference coming from Jerome Powell and the Federal Reserve. And we'll get a little bit more information on what their plan is with interest rates. If they're going to cut more, if they're going to continue to cut as aggressively as they have been, which, if they continue to do that, that's even more catalyst for the stock market to go up. And, I think we could finish the year at all-time highs in all of the big indexes, which is pushing valuations up even more. But, which is not a bad thing to have these valuations continue to get pushed up if you're invested in the market. But for people that aren't invested, now is where FOMO is starting to hit. And once FOMO hits and everybody continues to pile into the market and valuations get driven to the top, what's at the top? There's a bubble at the top and bubbles pop. So just be wary of that. This thing can take, these cycles take a very long time to happen, like years even. So I'm a pretty conservative investor. I'm pretty conservative with my portfolio. As you can tell, I'm not a day trader. I also have a lot of money in just ETFs. for that diversification and for that stability in the accounts. And I do play some riskier bets, and some of them pay off, some of them don't. But that's pretty much the update in the account, guys. If there's anything else you want me to go over in my account, if there's any specific stocks you want me to talk about, or if there's anything that you want me to throw in these portfolio update videos that I normally don't, let me know in the comments below. I'm here to learn just as much as you guys are. And hopefully we can build a community here where everybody learns from each other. Maybe I'll make a Discord in the future where we can actually all talk about each other, or talk to each other, not talk about each other. But, that's going to be maybe a next year thing. I only have a certain amount of time that I can really dedicate to this whole YouTube thing. But yeah, I hope you guys enjoyed the video. That's pretty much what I wanted to talk about. As always, I wish you the best of luck on your investment journey. Peace.